Stop everything you are doing right now and listen. Right now. Today is March 7th, 2026, day 7 of the war, and oil just posted its single biggest weekly gain in the history of futures trading. Bigger than the 1973 oil embargo, bigger than the Gulf War, bigger than anything in 43 years. The Strait of Hormuz, the waterway that moves 20% of the world's oil every single day, is closed. And your fuel prices are already climbing right now. In the next few minutes, I am going to show you exactly what is happening, what WTI at $90 means for what you pay at the pump this week, the 3 price scenarios analysts are modeling right now, and what to watch in the days ahead. If your money matters to you, stay until the end of this video. This one is different. Here is the full picture. 6 days ago, on Saturday, February 28th, the United States and Israel launched the most aggressive military strikes on Iran in history. Operation Epic Fury, Operation Roaring Lion, B-2 stealth bombers, high-precision missiles, a coordinated assault targeting Iran's nuclear sites, missile infrastructure, and political leadership. Iran's supreme leader, Ayatollah Ali Khamenei, was killed in the strikes. 36 years of leadership, gone. Iran's response was immediate and severe. The Revolutionary Guard launched retaliatory missile and drone strikes across the Gulf. Qatar, the UAE, Bahrain, which hosts the U.S. Fifth Fleet. Tankers hit, crew members killed, and over 150 ships dropped anchor in open water, too frightened to move. And then came the move that changed everything. The Islamic Revolutionary Guard broadcast a message over open radio frequency to every vessel in the Strait of Hormuz. 4 words: no ship may pass. And the market believed them. Because this is not a threat. This is day 7, and traffic through the strait is 0.
Let us get to the numbers. WTI crude oil closed on Friday at $90.90 per barrel. That is a 35.6% gain in a single week, the largest weekly gain in the history of WTI futures contracts. 43 years of trading history. This week was the biggest of all of them. Brent crude closed at $92.69, up 28% in 5 days, its biggest weekly jump since April 2020. And here is the number that hits every single person watching this video. The average price of gasoline in the United States, $3.32 per gallon, up 35 cents in 1 week. That is not a futures chart. That is the number on the pump when you fill your tank today. Now, here's what most Western channels will not tell you. From here in Bahrain, where the U.S. Fifth Fleet is based and where Iranian drones have already struck, this is not an abstract market story. The Strait of Hormuz is 50 miles from this studio. The tankers that are anchored, waiting, are visible in the Gulf waters nearby. Saudi Arabia and the UAE, the world's 2 largest oil exporters, are now running out of storage because their oil has nowhere to go. Iraq has already cut production by 1.5 million barrels per day. JP Morgan says that could widen to 3 million barrels per day within days. And Kuwait, the UAE, may be next. Here are the 3 oil scenarios that the world's top analysts are modeling right now. Scenario 1, de-escalation. If diplomacy begins this week, nuclear talks resume, Hormuz reopens, WTI pulls back towards $70 to $75, pump prices stabilize, markets breathe. This scenario requires Iran's new leadership to signal willingness to negotiate. Currently, that signal has not come. Scenario 2, prolonged closure. If the strait remains closed for 3 weeks or more, JP Morgan has put $120 on Brent. Gulf producers run out of storage, force shutdowns. That's a supply shock the world hasn't seen since the 1973 oil embargo. U.S. gasoline hits $5 per gallon, possibly higher. Global inflation surges. The Federal Reserve faces an impossible choice. Scenario 3, full blockade. If Iran deploys mines and anti-ship missiles for a full and forced closure, Deutsche Bank has modeled $200 per barrel. Qatar's energy minister used the words, "bring down the economies of the world." Iraq's deputy prime minister cited $200 to $300 as an extreme scenario. Let's slow down. Let this line breathe. This is the key analytical insight of the entire video. The market is not pricing Scenario 3, but it is beginning to price Scenario 2. And Scenario 2 alone is enough to reshape global inflation.
Let us get to the numbers. WTI crude oil closed on Friday at $90.90 per barrel. That is a 35.6% gain in a single week, the largest weekly gain in the history of WTI futures contracts. 43 years of trading history, this week was the biggest of all of them. Brent closed at $92.69, up 28% in 5 days, its biggest weekly jump since April 2020. And here is the number that hits every single person watching this video. The average price of gasoline in the United States, $3.32 per gallon, up 35 cents in 1 week. That is not a futures chart. That is the number on the pump when you fill your tank today. Now, here is what most Western channels will not tell you. In some countries like Bahrain, where the U.S. Fifth Fleet is based and where Iranian drones have already struck, this is not an abstract market story. The Strait of Hormuz is 50 miles away from them. The tankers that are anchored, waiting, or visible in the Gulf waters nearby. Saudi Arabia and the UAE, the world's 2 largest oil exporters, are now running out of storage because their oil has nowhere to go. Iraq has already cut production by 1.5 million barrels per day. JP Morgan says that could widen to 3 million barrels per day within days. And Kuwait, the UAE, may be next. Here are the 3 oil scenarios that the world's top analysts are modeling right now. Scenario 1, de-escalation. If diplomacy begins this week, nuclear talks resume, Hormuz reopens, WTI pulls back towards $70 to $75. Pump prices stabilize, markets breathe. This scenario requires Iran's new leadership to signal willingness to negotiate. Currently, that signal has not come. Scenario 2, prolonged closure. If the strait remains closed for 3 weeks or more, JP Morgan has put a $120 per barrel on Brent. Gulf producers run out of storage, force production shutdowns. That's a supply shock the world has not seen since the 1973 oil embargo. U.S. gasoline hits $5 per gallon, possibly higher. Global inflation surges. The Federal Reserve faces an impossible choice. Scenario 3, full blockade. If Iran deploys mines and anti-ship missiles for a full enforced closure, Deutsche Bank has modeled $200 per barrel. Qatar's energy minister used the words, "bring down the economies of the world." Iraq's deputy prime minister cited $200 to $300 as an extreme scenario. The market is not pricing Scenario 3 yet, but it is beginning to price Scenario 2, and Scenario 2 alone is enough to reshape global inflation.
Here are the price levels that will define the oil market this week. $95 on WTI, the next resistance level. If we break above 95 and hold, $100 oil is not a forecast, it is the next price. $100 per barrel, the psychological barrier, the level that triggers emergency government responses globally. Emergency reserve releases, price caps, political panic. Watch how governments respond if we reach this level. $85, the key support level. If the Strait reopens this week and WTI falls back below 85, that tells the market the worst of the supply shock is priced in. Watch for that on any ceasefire or Hormuz opening news. Let me make this personal for a moment. This is not just a number on a trading screen. Every cent oil rises gets passed on to your fuel pump, to your grocery delivery costs, to every flight ticket, to the heating bill, to every product that is manufactured, packaged, or transported. Oil is in everything. Capital Economics estimates that if Brent holds at $100 per barrel, global inflation increases by 0.6 to 0.7%. That is the difference between a rate cut and a rate hold at the Federal Reserve, between mortgage rates falling and staying high. This oil story is your money story.
Now, oil is only one piece of this story. Because while oil is surging, gold is doing something that even veteran analysts are calling extraordinary. And Bitcoin? Bitcoin's reaction to this war has revealed something about its true nature, something that every crypto holder needs to understand right now. In our next video, dropping this week, we are going deep on gold and crypto, what the smart money is doing, where the safe haven flows are actually going, and whether Bitcoin is behaving like digital gold or like a tech stock. If you want that analysis the moment it drops, hit that subscribe button right now and turn on the notification bell, because in a market moving this fast, 24 hours of delay can cost you real money. Before you go, a genuine ask. Most people watching the news this week have no idea what a Hormuz closure actually means for their cost of living. They see the headlines, but they do not see the connection to their fuel pump, their grocery bill, their mortgage rate. You do now. Share this video with someone who needs to understand what is happening. A family member, a friend, a colleague with savings or investments. Be the person who keeps them informed. They will thank you for it. And if there's a specific market you want us to analyze, whether that's natural gas, shipping stocks, airline exposure, or another commodity entirely, drop it in the comments below. We read every single one, and we'll build our next video around what you need to know. If this analysis gave you clarity, smash that like button. 1 second, and it gets this intelligence to the people who need it. I am Global Market Impact. Stay informed, stay ahead. See you in the next one.